Want to introduce today is the build combos section. This is a new section that has that's a tool that we created uh, in last couple of weeks, and um, the the purpose of the tool is slightly different. It's not for option traders. It's for people like my wife, honestly, because what she does and her investment strategy has been reasonably successful without um, a lot of you know thinking. She has been very disciplined in following dollar cost averaging. So what she does is every week on Friday, she has been buying Nasdaq ETF like QQQ, uh, and Berkshire BRKB forever, like since I remember. Since we started many years ago, she has been doing that investment, and that has worked well. Um, but now she asked me the question that we look into these ETFs all the time, and then you for dollar cost averaging, but there are so many ETFs in the market. So is there anything better than QQQ or BRKB that we are buying? So that's where I built this tool. It's useful for a quick look. The way it works is that in the analyze ETF section here, um, if you go, it gives you four lists, and in those four lists, you can order or uh, sort the performance of all these ETFs either by a 1 year gain, a 3 year gain, a 5 year gain, or stability. So naturally, if you sort it by 1 year gain or 3 year gain, the highest gaining ETFs will be on top. Um, but if you sort it by stability, then uh, it puts some premium on those ETFs which have always increased in last 1 year, 3 year, or 5 year period. In the sense that, for example, if you look at any of these, you will see a positive gain in 1 year or a gain in 1 year, uh, and the 3 year gain would be higher than the 1 year gain, and the 5 year gain would be higher than the 3 year gain. So these have been ETFs that have consistently been going in one direction. So drawdowns are controlled. So it makes sense to make, if you guys are into this, and many of my friends are, and it's my wife, of course, my best friend also is. Um, and so she has looked at that, and she has used it for making some decisions. So for example, she has added this one to her list, FDN. I know that. So she has not just been doing QQQ, but FDN as well. um, and she has added IHI as well because of her interest in the medical devices and healthcare sections. So it's a useful tool for you to decide and look at your dollar cost averaging ETF investments. Any questions, any comments on this list first?
That sounds very interesting for maybe my wife to get into.
Yeah, it's kind of easy to use. um, and if you go through it, there is another thing that we built, because these numbers of course are percentage gains. So for example, 126% is the gain on IGV uh, price today minus 5 years ago. But that typically is not what dollar cost averaging is about, because you are investing every month or every few months or every week in case of my wife, and so on. So these numbers might not be what exactly you see. So sometimes people wonder that, if I have been investing in this uh, on a monthly basis, then what is it I'm going to get? um, and therefore there is another tool that follows from here. So for example, if you just click the add button It asks you a little question that whether you want to add this and whether you want to add more ETFs to your combo, and let's say we say yes, um, and whether we, let's say, add n the one, and then I don't want to add any more because let's just stick with two. So then it takes you to Ender page, um, and in that page you can hit the analyze combo button. Apple is the default edition just to keep some programming quirks controlled, so we can remove it. Um, and then analyze the combo. And what it does is, let's say you're investing $2,000 every month, then you can, run it differently. So for example, this is 50-50, but you could say go 38 here and 54 here, something which is close enough to 100. Even if it's not, if you hit analyze combo, it will kind of adjust it back to values which are total 100%. And then what you see is a different gain, and this is based on the fact that you have been investing every month into this, rather than just investing once 5 years ago. So you can see that the effective gain changes uh, to a slightly more reasonable number, or slightly more realistic number if you were following dollar cost averaging. You could also go down a little bit in the page, and then it will tell you uh, the gains of the combo that you just built as compared to the broad market. So clearly, since the broad market has not been doing well in last few months, and this combo has been doing reasonable, and now I understand why my wife's portfolio is better than mine. um, it's especially for the dollar cost averaging kind of stuff, not for options and all, but she doesn't do options. It also takes you through if you had been doing this forever. So this chart builds from 2008, then how your portfolio would have looked. Um, for the invested money chart, that is the orange color. Um, and so this is how your portfolio would look right now, and this is how the index has been. So quite a neat tool. You can also add stuff here. I mean, for example, you could, if you know a particular stock that you like, let's pick some. Frank, what's your favorite stock?
One of my favorite stocks would be Boeing Aircraft, BA.
Okay, so let's find that. Um, okay, so it didn't find it for whatever reason. So it seems that it's not in my search list. Um, what else? Let's try it this way.
Oh, do the
Oh,
Q's,
it found it.
QQQ.
Oh, it found it. Okay, so B8 found it. It just
Good.
probably needed. So, so let's say you have been doing. Okay, let's do equal. So let's say you have been doing 33% each to each of these, and since you like BA more than any of these, and then it'll give you the for this particular combo, what's your gain is. So what this means is that you are investing, let's say whatever you're investing, 30%, 33%, that's divided in three tranches of 33% each, and then you invest every month $333 each into each of these. You could also change it here to whatever 2000, and then it'll change. The effect will be on this curve. And then if you particularly like the curve, or you can just say, okay, so let's say Frank's, you can just save it, and that's it. So if you save it, it'll come up in your combos. This is my login, so you won't see it here, but it'll come up in Frank's. And so if you click it, you can go back and you can continue to track it on a day-to-day basis as well, or share it with somebody. So um, basically that's the purpose of the tool, so that you can kind of quickly assess if a dollar cost averaging kind of thing makes sense for whatever it is, whether it's a ETF or whether it's a particular stock um, that you want to play in. So clearly not for option traders, but makes sense for uh, dollar cost averaging and index guys.
That's pretty good. Thank you very much. I appreciate that.
Okay. Any other questions, guys? Because we are approaching like it's the 7, and so I have end the meeting at 7. So I just wanted to ensure that we don't get cut in the middle. In case you have a question, shoot now. Otherwise, we'll be talking soon.
Actually, is it the time frame what you have is for the 10 years? It seems like, is it possible to reduce it to change that one?
Yeah, it is 10 years, but you can just look at the graph
Okay.
from wherever to wherever. It doesn't matter.
Yeah. Okay.
So you can look at from 30th March, let's say 2017, to now. It's been about 40,000 investment, and then you can look at these curves. So it's not very user friendly, I get that, but I just built it to have, at least for people who have some friendliness with math, a little bit. uh,
Okay.
but yeah, you have that information available. You could also click these links. What this does is it gives you a comparison chart of percentage changes of your combo versus the broad index again. So this is over last 1 month, and you have it up to 5 years. So basically your combo has been doing, at least Frank's combo in this case, has been doing reasonably well compared to SPY. So Frank, good choice. Congratulations.
Yeah. I I do have one question. If you could go back to your home page.
Okay.
Well, the question I have basically was that since you were in the Turbo Pack and you have your profile, I thought I wrote it in, but I can't find the details. You had a um, of all the different strategies, you used every one but about 3 or 4. So can you tell us the 3 or 4 that you do not use?
Yeah, sure. Let's go through that. And maybe you can take a snapshot, but it's right here. Um, so first, let's make sure that you have got these ones right. The target profit per trade is 200%. The buy limit is the most important thing. That's 1%. And that ensures that you do not get options which are expensive historically, and the implied volatility is too high on those. So that this is an important setting. Keep it low. You can move it around a little bit and do experimentation and see what you like. The stop loss is 5, uh, and I'm investing $250 or less every trade. As far as this list is concerned, everything is yes except the top 4: Milestone Plus, Swing Plus, Swing Boost, and Milestone Boost are a no, and QRS Boost is also a no. Everything
Okay.
else is a yes.
Okay, so you got 5 of them that are no's.
That's right. That's right.
So isn't 200% just a bit? I didn't say the word greedy, but I'm just saying, is that not a bit unrealistic? I mean, in a time where things are choppy.
Maybe, but then if I look at it, then when things are choppy, you can see there has not been too much happening on the page. So from December mid to January mid, just 4 things came up. Um, so you kind of control for that volatility by having the right numbers here.
So how about more like 25 to 50%? You'd be happy to get some crumbs. You can make a lot of loaves of bread with crumbs.
So okay, let's try that. So let's go to 50 and let's see what happens. And so I've set it up to 50, and let's see what that does to our thing. Okay, so this is what I suspected. You win, your number of times that you win goes high. So actually out of 1400 trades, on 900 trades you made more than 50%. But the total money that you are making is not as high as we had last for the 200% setting.
Yeah, but that's going back to January 1st of 2017.
So
And so to do that is interesting as far as history. But if you pick a different time,
so let's look
I'm
at
just wondering. I don't know.
let's look at last 4 or 5 months. I think that's a relevant time, right? So let's look at September because this is when market started going haywire, right?
Yep.
So 82,000 on 23rd September uh, and 83,900 now. So that's about $1,000 plus after doing lots of things from September to now. So that is what you still make money. Actually, you had a positive trade just a couple of days ago, January 11th on this.
So do the same thing from that same time period from September to now with a 200% profit. Did you make $1,000?
Yeah, let's do that. So let's do 200. Let's see. And let's open this new setting. Let's see what happens here.
I'm not trying to put you on trial. I'm just fascinated by the.
No, I actually love it. This is the purpose of the tool. These are all tools for us to become better investors. So let's see. Uh, so clearly all these numbers go high because of the history. I mean, you make much more money effectively, but let's see, 23rd September. So it's about 175, 174 at on 23rd September, and now it is 177. So in effect, you actually make, even now you have been about 3,000 higher.
Okay, that's interesting.
And I can let's go deeper into why that's happening. So let's see, sell target met, and I think that's the reason. So for example, you had a trade on November 19th that met sell target, then you had a of 227%, right? Um, and if I look at the same trade in the 50% setting, which I have saved, so let's see, we have more trades. We were looking at, I think, VTR or something. We have many more trades meeting, but where is the VTR? Yeah, here. So yeah, you still met 200% here. So this stock clearly had a jump. That's why this happened. But I'm sure there are others where we came out. So this is 209%. This is American Express, and the one
Okay.
of those. Let's see what happens. Let's search for American Express directly. So yeah, see, this is what happened because we came out, it had a jump, but we came out at 95% gains. And in case of 200%, you came out at 209. So you made a little bit more money. And those things, I think, keep adding up. Yeah, we have another one, KMB. So November seemed to be a good month. On KMB, if the limit was 200%, this one came out at 285. Let's search for QMB here. Where is it? It's right here. So you came out at 63%. So because
Okay, so statistically, you actually made more, even though you asked for more.
That's right. Yeah, that's the play. That's the play. And then you run into situations like these. For example, the SNA thing, where you came out at 50%, and then I don't think we made any money on SNA. Trade reached a stop loss. So because we were looking at 200% in this scenario. So statistically, even for the bad market, it seems to make sense to stick to your settings. And that's what my general analysis has always been, but I think we repeated that just to ensure that things keep changing all the time. I think we should keep doing this off and on.
Okay, very good.
And if you are a little bit uncomfortable with 200% and you like to have more adrenaline flowing by having a higher number of trades being winners, then you could also go somewhere in between. Rather than 100 200%, you could go 100.
Right.
And let's see what that does to the 23rd September. So let's reload this. So again, this number as expected went down, but let's see what happens to 23rd September to now. So again, 23rd September is 128, and now it is 129. So roughly the same compared to the 50% gain target, where you made $1,000 because you were about what? You were about 82,000, and then you increased to 83 something, 83. So 1,000 change, and for
Okay.
100% target, you are at 128K, 128.5, and you are at 129.5. So yeah, about 1,000. So in general, over a long run, it always makes sense to be a little bit more aggressive in terms of your winning target, um, rather than being targeting 50% or less. Because you don't know when things are going to turn for better. So we have no idea about that. And
That's right.
when they do, then you run into this sequence, like in a month or two, you will have a big jump. So for example, this is 2017, like 2017 was great, but even in 2018, it has been okay, sort of from 87 to, it has still been up for 2018 to 129. Okay, so
All right. I appreciate that. Thank you.
thanks, Frank, and thanks everybody. I unfortunately need to go. I'm 7 minutes late for my other meeting, but it was great talking to you. And Frank, as usual, awesome questions. Let me know if you need anything else, and or if you guys have any question. Have a
Okay.
good day.
Thank you.
Thank you as usual. Good night.
Bye.
Thank you.